What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is June 11th of 2019. Well, folks, I hope you all are having a great day wherever you are, and in today's video, I want to spend some time to talk about something that's not only very close to heart, but I feel is very important for people to know about if they're getting involved in cryptocurrencies and blockchain technology, and that is the topic of the killer application being money. Now, I know a lot of people out there who are involved in crypto and blockchain believe there are all types of awesome applications for crypto, and I have no doubt about that, and I'd like to know down below in the comments what you all believe is that killer application, even if it's a disagreement with mine. But I want to spend some time to explain my rationale as to why I believe money is the killer application. We're going to be taking a look at some opinions, taking a look at some of the data, and also some of the history that has proven so far that money is that killer application. Now, I want to let you all know later on in the video, we are going to be doing a really interesting interview that's sponsored with Ergo, and Ergo is a platform that's working on contractual money. So I thought it'd be quite fitting to kind of segue that in to this discussion. So we'll talk to them later on in the video. If you guys are interested, stay tuned for that. But let's go ahead and dive into the first pieces here. Let's go ahead and focus on the two major factors of money. Now, we've commonly heard in a lot of arguments in this space that, Bitcoin, for example, is competing between two different things, that it has to be a store of value or it has to be peer-to-peer digital currency as it was stated originally in the white paper by Satoshi. But the interesting thing is that I find that this dichotomy comes up a lot where people split between these two, yet people don't realize that they're synonymous, that they actually have to be in tandem. You have to be able to exchange that store of value. It can't be too burdensome for people to exchange it. And along with that, you need to be able to store wealth in order to have peer-to-peer electronic cash. If the volatility is too severe, no one's going to use it as peer-to-peer cash, or that I can't have some kind of consistency where there's lower lows over time historically. So these are two factors that we need to have in regards to crypto as money. So let's go ahead and talk about why cryptocurrencies as money could really be an application. Well, first off, we have a lot of people who see this becoming a reality over the next few decades. A lot of impressive, respectable people. And we can take a look at here this Money article here where it states that cryptocurrencies will replace national currencies by 2030. Now, this is actually around the time range that I believe cryptocurrencies are going to find the bulk of their, kind of use case to the world. And we have a lot of different quotes throughout here from some very respectable people. You have people, for example, like Thomas Peterfree, who's started Interactive Brokers. He's a self-made billionaire immigrant to the United States, and he believes that cryptocurrencies as a new asset class could lead to the collapse of the global financial system. Very bold claims from some very respectable people. And Thomas Frey as well, who's a futurist and an architect, has actually come out and stated he actually spoke with the Federal Reserve, and I think it was September of 2018, he spoke with them and basically told them that this is likely, not only was Christine Lagarde, who's the lead of the IMF, pretty much right in the sense that, this is going to disrupt central banks and things of the like, but along with that it could dominate 25% of global currency valuation. Now, just to kind of, not jump the gun here on trying to get our expectations too high, I've talked about this in previous videos where cryptocurrencies as a market are so small. Right? If you want to talk about scale of growth and potential behind something, look, I'm not trying to sell you guys an investment opportunity, but the thing about it is cryptocurrencies like Bitcoin, this chart's a little bit outdated, but it's actually valued at around $140 billion at the current market rate. And if we take a look at global money supply, you have the broad money supply and the narrow money supply, which average out to a little bit under $100 trillion. And that's not even tackling, gold and silver markets. Gold markets are around 7.7 trillion, and we've outpaced silver markets, which are around 17 billion. Now, keeping that in mind, let's keep it very conservative here. Let's say that we tackle 5% or 10% of these markets. Let's just take the money supply. We're not even talking about gold markets, which is obviously a competing player for Bitcoin if we're talking about the store value aspect. That's what gold's broadly used for. So if we take that into account, if we just tackle 10% of $100 trillion of wealth, we've got a $10 trillion market on our hands, and that's really exciting. So if crypto can have the right properties, we could possibly tackle that. And why would it be a good replacement maybe for gold or for traditional currencies? What benefits does Bitcoin have? Well, again, I don't want to just sell Bitcoin as this speculative random investment vehicle that everyone tends to think that it is. Because for a lot of people in the West, that's what it is. We have the money and the luxury to speculate all we want. But Bitcoin as a tool is extremely powerful. And the application of crypto, sound crypto, in the way that it functions, being decentralized, being trustless in the sense that how it reaches consensus, has financial incentives, and isn't owned by one single authority or issued by a single authority. All of those properties, along with its finite supply at 21 million coins, makes Bitcoin sound money. It makes it the fifth evolution of money. So in this chart, before we get into it, there's really two other innovations that they're not showing here. The first was commodity money, which was a variety of things like shells and things that could easily be diluted, that tribes and small civilizations would use to exchange for goods and services. It was the first kind of evolution outside of the barter system. It didn't work too well because it wasn't limited to some degree. Gold came in on the equation and changed that. It was the next step of evolution of money, the second evolution. And then we had paper money, which was much more convenient, though it could be, yet again, diluted if the central bank or the money manager of that economy decided to inflate the currency supply. But it was much more convenient in that case. It was portable. It was very easy to exchange with others. It wasn't too heavy, and it also wasn't risking up a lot of your wealth when you carried it around. Then there was also a fourth evolution between fiat and crypto, which was digital money. So this is just like fiat money, but it was even more convenient and much easier to transfer in the sense of peer-to-peer exchange, but also in regards to international transfer. And, there's all kinds of interesting things you can do with digital money that you can't do with fiat. But then we've come to the fifth evolution of money, and that is cryptocurrencies, and specifically one cryptocurrency that meets those properties, and that is Bitcoin. So let's go ahead and talk about some of these properties and what they mean. So fungibility, okay? So this is something that matches between gold and the dollar. And this is something that Bitcoin, I'll be fair, actually, if anything, is still missing out on a little bit. Fungibility is basically meaning that things are interchangeable, that one Bitcoin equals one Bitcoin. But that isn't always the case because seeing as Bitcoin is actually traceable, this is a big misconception. Bitcoin is not private as a digital currency. In the case that Bitcoin can have a different value if that Bitcoin has derived from a long chain of history, meaning that if that Bitcoin has been sent around from a lot of addresses, it may not be as private as we'd want it to be, or it might be it had been changed with hands that we probably don't want that Bitcoin to be changed with. For example, maybe like it used to be used for the Silk Road or something like that, right? So that's one thing actually where this thing will get it wrong. Now this chart is if you were to buy it from a Bitcoin ATM or if you were to mine it new from using a miner in that case. In that case, yes, Bitcoin would be fungible. But there is technology improvements that are actually coming for fungibility to Bitcoin and privacy, where if I send you Bitcoin in that case, it will be completely anonymous. No one will know who we are. They'll not be able to trace who we are. And along with that Bitcoin will equal a Bitcoin in that case in every single way, shape, and form, as peer-to-peer electronic cash should be, right? So that's coming in the future. That's not what Bitcoin developers are focusing on right now. But outside of that, everything else here is true. It's non-consumable. You can't really consume a Bitcoin, right? You can't eat it, things like that. And you wouldn't eat gold or fiat. You also have portability. This is extremely portable because all you need is really a smartphone at the end of the day. That's really all you need. You can download cryptocurrency wallets, and it's still very, very secure. And then you can have, hardware wallets, paper wallets, all kinds of stuff. It's a very low market to entry, and it's very easy to move. It's very durable as well. You can't really destroy Bitcoin. As a network, it is one of the most resilient decentralized networks on the planet, and just most resilient networks in the world because it's so distributed and decentralized. And the way that the network reaches security and the time-tested proof of it over the last 10 years, not being shut down whatsoever and continuously processing transactions, is one of the biggest technological feats we've seen in history. It's absolutely stunning to have a network running up that much without any latency or downtime. Highly divisible. You can break Bitcoin into 8 decimal points known as Satoshis. So I can send, fractions of a penny to someone if I wanted. Now, the one thing you wouldn't be able to do nowadays is probably that on the Bitcoin network because the fees are quite high, but with scaling solutions like Lightning Network, and then also hopefully over the future, finding other ways to scale blocks themselves more with things like Schnorr signatures, another technological improvement coming to Bitcoin quite soon. This will drop fees even lower and allow people to probably process payments for less than a penny or two, right? Now, we also have security, easily transactable, and scarce. So it is secure in the sense that we talked about. You can't counterfeit Bitcoin. It has yet to be seen on the Bitcoin network. There was, I think, one occurrence a long time ago, but again, it got resolved very quickly. This has happened on a lot of cryptocurrency networks in the early days, but the code has been, resiliently checked. It's all open source. You can go see it if you want to learn about it. And then it's also easily transactable. Right, so I can send this to anyone. So long as someone has a mobile wallet, I scan the QR code, I can send them any amount of Bitcoin I want. And I don't have to deal with any third parties. I don't have to deal with any authority telling me I can or can't. It's truly peer-to-peer, and it's truly the free choice of the individual and the other peer on the receiving end. And we also have scarcity here. Bitcoin is the most scarce form of money. Gold, for example, which has a limited supply, has about 1% to 2% inflation every year. Now, how do you inflate gold? Well, there's new gold mined every year, right? And as new gold is mined, that's going to dilute the value of the current existing supply, right? So you do have 1% to 2% inflation in regards to gold and other commodities. Some commodities are even worse. But gold has been around 1% or 2% inflation rate. And that's very similar to the reported numbers for the US dollar and a lot of other world reserve currencies. So it sometimes isn't always a good hedge. Whereas in Bitcoin's case, for example, which is at around 1% to 2% inflation right now, over time, Bitcoin is deflationary, meaning it's going to reach a cap of 21 million coins and never go beyond that. No ifs, ands, or buts. That's the monetary policy for Bitcoin. And that's supposed to be reached sometime in 2100, but the vast majority of Bitcoin have already been mined. We're sitting at around, I think, 17.1 or 17.2 million at the moment. So, we've got a lot of Bitcoin already out there in circulation. Outside of that, there's three other factors. The sovereignty of currency. Bitcoin, much like gold, is not produced by a government. That's actually seen as a benefit here. It's not controlled by a government, unlike fiat currency, so it can't be diluted. And it also doesn't have any, governments don't have any legal kind of right over the currency in that case. So when you're dealing with the US dollar, there's a lot of say from the US government as to how that currency is going to function and what rights you have over using that currency and where you can store it. In this case, Bitcoin, you can store anywhere in the world. And as we mentioned before, it's decentralized and also programmable money. Now, programmable money offers a lot of interesting opportunities, and that's going to segue us into a really important topic later on in the video. So let's go ahead and see some real use cases. Well, where are some parts in the world where right now, where we've seen the killer app or the portion of the application of money really take off, and that is the store of value? Well, we're seeing that in Venezuela. People have been flighting outside of their broken currency, which has been inflated beyond means, into Bitcoin as money. And you can see we're getting serious volume here, guys. On a weekly basis, you're getting anywhere from $6 to $7 million, US dollars, that is, of Bitcoin volume going through Venezuela. And again, this has to do with the fact that Venezuela, much like many countries throughout South America, through Southeast Asia, throughout all kinds of parts of the world, that have time and time again repeated history, are diluting their currency. And when your purchasing power or your savings are put into these currencies and they lose 50% of your value, you now can purchase 50% less, right? That's not a good thing. You cannot have your wealth in something like that, which has led people to flighting to something that isn't controlled by a nation, that isn't being able to be censored by capital controls. Capital controls being that you can't convert your currency to other fiat currencies because all of it's pretty much done digital. In that case, it's very difficult to do that. However, but in the case of Bitcoin, if I simply can do something peer-to-peer, I don't have to go through a broker that can be censored as a central point of failure by the Venezuelan government. And the same goes here for Argentina. Same exact case scenario. A little bit worse, less worse than Argentina, but still very, very messy. And you can actually see at the conferences that they have in these countries, guys, there's thousands of people. It's massive in South America. And it's so exciting to see. As much as it's a terrible scenario, it's exciting to see that transition happening. People waking up and realizing that this is the place to go to if they want safety from these untrustworthy governments and central banks. And we can see this is not just in those countries. This is a global phenomena. Every single week, we're getting anywhere from around $60 to $65 million of Bitcoin volume in regards to local Bitcoins. And this isn't even including the countless other exchanges out there where people are actually using cryptocurrencies either for commerce as businesses to accept as payments or as a way to store wealth, right? This is just a good way to see, a good kind of even the offshore world where people are really using it as more of a flight of wealth in this case, comparative to other exchanges. Now, I want to talk about what cryptocurrencies like Bitcoin are missing but are working towards developing at the moment. And that is the kind of next layer of Bitcoin and cryptocurrencies as money. And that is opening up financial services and contractual money. Now, we've already seen on networks like Ethereum, which is another cryptocurrency, one of the other leading cryptocurrencies in the space, has this idea of the DeFi movement. And this is something that is a mixture of a variety of different projects and companies coming together to offer up financial services and boost financial inclusion. And it's tackling so many different areas, from loans to payments, being able to trade real world assets anywhere in the world, derivatives, exchanges, insurance. And one of the things that I find really cool, stable coins like Maker, which are going to help us through the transactional period where crypto is too volatile, where we'll be able to lock up our, in this case, in the case of Maker, our Ethereum, and actually be able to generate stable coins off of that, US dollar coins that allow us to transact value. And in a sense, we're using our crypto as the collateral, or I like to think of it as the store of value behind those stable coins, right? So it's pretty interesting. I think it's a very fascinating basket of topics and everything to evolve cryptocurrencies from where they're at right now, from just simply being, Bob sent 5 Bitcoin to Alice, right? This allows us to do some really interesting things. And this leads us into the topic of where we're still missing things, and that is contractual money. And in today's episode, we're going to be talking to a platform called Ergo. Now, this is not an ICO. It is not a pre-mined cryptocurrency project where the developers have mined a lot of the coin. No, this is a from the ground up, community-driven project that's been in the works for the last 2 years and is focusing specifically on this topic, this very important feature of adding the contractual ability to exchange money in unique ways, not just simply, again, as I mentioned, Bob sending money to Alice. We need to get smart about this. We need to be able to have agreements where I say, if this, then that, I can send money. And a lot of other unique functionality that we'll talk about that Ergo is focusing on at the moment. So again, let's go ahead and dive into the interview and learn a little bit about what Ergo is planning on doing. Alrighty, everyone. So today on our sponsored interview with the Ergo platform, we're going to be discussing with 2 individuals from the team. We're going to be talking to Alex, who's one of the lead developers on the protocol, as well as Cam, who's leading on the community side. We're going to be talking about a lot of different things in regards to the Ergo platform and see how they're trying to build a platform for contractual money, which is something, as you all know, that I'm very fascinated by. Now, when I was first looking into the platform, I not only was interested by what I was reading in the white paper, but there was a lot of interesting quotes from some big players in the space that I respect. For example, Charles Hoskinson, who was saying it was one of the most interesting projects that he was watching at the moment. From people as well who were the founders of platforms like Waves, who came out and said that it's one of the more interesting proof of work coins in the space. So as we continue to look for improvements in the cryptocurrency space, I'm very eager to sit down with these 2 gentlemen and learn more about what they're doing. Guys, thank you guys for taking the time to come onto the channel, and I'm really excited to learn more about what you all are doing.
Thanks for the introduction.
Awesome stuff, guys. Well, no, sorry, I probably should have specified and everything, but I mean, so usually in this case, we've got 2 of you on here, and I think it's really good to just kind of sit down and learn a little bit more about what you all are aiming to do. So I guess we could start off right away by going ahead and letting Alex kind of take the show here and just kind of explain, what are you guys trying to build with Ergo in this case? What's like the main kind of core philosophy of what you're trying to build, and what's a little bit of your background as one of the lead developers?
Well, I think Alex, you should introduce your background. I think you've been in Bitcoin and crypto for 8 years now, and worked on numerous projects, done a lot of peer-reviewed and research papers and science, and a lot of attended and presented at a lot of conferences and events over these years. And I'm happy to give an intro to myself. I'm Justin. Actually, is my name. My Gmail account there may come up with a funny name, but I'm Justin, and I've been in crypto for about 6 years, and Bitcoin. So I started out with Bitcoin and predominantly focused on Bitcoin over that time. Now around September 2017, I focused exclusively on crypto. So I quit my previous job, focused just on crypto. And one of the first things I did was a lot of fundamental research on a lot of different projects, and Ergo really stood out to me. And I had the opportunity to meet the two lead developers, one of them being Alex, in September 2017 at the Genesis Moscow conference. And that really cemented what I had already been forming after reading their research papers, that this was that they were really going in the right direction. Then I revisited the project last June, a year later, well, almost a year later. They had basically done everything I'd expected them to do, been working very, very hard and making progress and heading toward launch. And so I reinitiated dialogue with them, and then started getting more and more involved. And so I've just been getting more and more involved over the past year.
Awesome, Justin. I mean, it's nice to see that you've seen some progress going on in the project. I was going to point out, I mean, you guys have been around for 2 years comparative to most projects who kind of came and went with the bull run, and, you know, some as well that have kind of popped up in 2018. But over a year, I haven't seen too much progress in a lot of protocols. So I'm interested in this case, you know, to talk with you, Alex, in this case about what is the objective of Ergo as a platform. You obviously have a lot of skills to your background, as well as the fact that you've been involved in cryptocurrencies for a while. What is going to make Ergo different, and what's kind of the overall long-term vision of what you guys are trying to build?
All right, so we are starting with the very first principles. So they are stated in the white paper. The first principle is decentralization first, right? And being philosophical, this principle is also linked to some technical innovations, like better light client support. Also stateless full node support. I believe we first in the space with this. Also in regards with decentralization of mining, we do have ASIC resistant, and also for the first time in the space, pull resistant consensus protocol. All right, and also developing further Bitcoin revolution, we are introducing the concept of contractual money. Right, so we do believe that cryptocurrency and blockchain is 99% about money, right, after all. Yeah. Even if you put some magic data on the blockchain, usually it's about using them after in some financial applications, right? Yeah, we do believe that these enterprise applications are mostly useless, 99% of them, right? Mm-hmm. And what we are doing is sound money, right? As in case of Bitcoin. But also we have extended scripting capabilities. So we have a notion of contractual money, means now money, right, like this note in a digital form, right, is coming with explicitly stated contract. So in Ethereum, you know, the code is first-class citizen, right? So the main concept in Ethereum is smart contract, right? So in case of Ergo, so we are deriving from Bitcoin, digital coin, UTXO concept. So the first-class citizen is a digital coin, but this coin is bounded to some contract, and this contract could be much more powerful than it's possible in Bitcoin. So we have such application examples as crowdfunding, ICO example, local exchange trade system, kind of community currency, and so on, so on. So we do believe we can do most of interesting financial applications. So I'm not sure about CryptoKitty stuff like that, but for 99% of cryptocurrency use cases, we probably do support them, right? So yeah, decentralization first, right, with a lot of technical innovations coming around to protect it, and also contractual money. So we have extended scripting capabilities in comparison with Bitcoin, but without sacrificing safety, right, and without problems with blockchain bloat.
You know, well, to build on what you were talking about, Alex, I just wanted to see, you're talking about contractual money, which I think is very important for people to understand. It's kind of a big term in that case that I think a lot of people are curious about. So, in the sense of contractual money, what are some of the really cool applications you could do on the Ergo platform that would build a lot of utility for the blockchain?
All right. So as I mentioned, we can do many particular interesting things like ICO, right? Examples. Crowdfunding, cold wallets, threshold signatures, multi-step contracts. So something like Mast and Bitcoin, but even more complex examples are possible with cycles in execution. So also we do have examples of community currencies like LED systems. So you can build even currency systems with properties different from Ergo currency, right? If you need, for example, for some coin which is backed somehow by US dollars, for example, right, or euros, so this is doable. Custom tokens are first-class citizens in Ergo. We have extended scripting capabilities, and we also have storage rent, unlike Ethereum, right? And unlike Bitcoin. So you need to pay for your contractual coins being stored in the system, right? Nothing comes for free, all right? And you need to pay for this storage. This leads to a new kind of economy. So now Ergo token, native token, is not just a store of value, right? As in Bitcoin. But yeah, it's also store of value because we have finite emission, right? To be finished after 8 years. So pretty soon. But also this token is to be used for paying storage rent fee, right? And then miners also have some additional income. So basically this fee.
Yeah, one thing that I wanted to build on, as a question towards what you're talking about, you have all this utility for the token and everything. I'm curious, as a network, why have you guys chosen to use proof of work? I know proof of work has kind of gotten a bad rap with the amount of, hashing power that goes into producing the Bitcoin network and the kind of low traffic that's done on the Bitcoin network. Especially seeing as right now the use case that people's pointing to is that it could be a store of value. So what are you guys doing different on the Ergo platform? Why is it beneficial that you guys are using proof of work over other consensus mechanisms?
Right. So, I started cryptocurrency core development with NXT, which was probably the first pure proof of stake cryptocurrency back in late 2013. So I left NXT back in 2014. But, after some time, I realized that proof of work is simpler, right, about its security guarantees. It's just simpler. Now it's pretty complicated. So during early years, right, proof of work was also probably secure. Now it's kind of complicated to talk, but proof of work is simpler after all. Also, it is probably about better distribution of tokens, but this is discussable, right? Also, proof of work is more friendly to light client protocols we are building. And also, after all, it is better. It is more secure, let's say, against some network attacks, etc. So not just in the consensus space, but in many specific software development issues, proof of work is just simpler and more reliable.
I could very much understand, Alex. If you're trying to build a platform for contractual money, you want to have absolute security and any lack of trust in third parties. Because I see a lot of proof of stake blockchains and a lot of POA kind of blockchains where there's authority in that case with select figures, even though identity is tied. I look at networks like Ripple, for example, and it's like I don't want to have select nodes, even if they're trusted partners leading my transactions for finance or being able to freeze my transactions, right? I should be able to have freedom over my wealth, same as anyone in the world, and being able to do contractual business with anyone. To build on that as well, what I like about it is that you're not only using proof of work, but you guys as well have made sure that it's ASIC resistant so that anyone can basically mine. It's resistant to pools. And I think that's a really big push. I think that that's going to be necessary. I'd seen a few projects go in that direction before. I think there's a general split nowadays between the two viewpoints. But honestly, I think in the effort of decentralization and making sure that there is a decent distribution of the tokens, I think that's a really good point on your guys' end.
Yeah, I think we are on the same page here. And about ASIC resistance and pool resistance. So I believe our scheme is the first practical pool resistant. So before us, there were some proposals in academic papers, but they were not much practical. So I believe we have the first practical scheme, and a paper is coming on that. Some draft is already available. And by the way, Ergo is also has been built on solid principles. So it's based on probably a dozen, maybe even more now, research papers, right? Most of them are done by our team, sometimes with external collaborators in academia. Mm-hmm. But yeah, we are also using some good ideas from outside if they are good.
I remember one of the works, I think this was either in your hashing algorithm or in the scripting language you had worked with the Research Institute. It does seem very academic in a sense. I can see why Charles from IOHK and Cardano has obviously been a big fan of what you guys are doing, and some of the previous legacy players from the Waves platform founder talking so positive about you guys. So I want to ask you all, because I know you guys are in the early days now. I mean, even though you've been working on it for 2 years, it's still in the testnet phase. You guys are going to be moving to mainnet soon, and you're going to be basically kind of pushing out to the community. And seeing as you guys have come on here and everything, I want to make sure people have the resources to know how they can engage with your guys' community, how they can get involved with participating and building out the concept, where they can go to learn about what you guys are doing. And along with that as well, how can they get their hands on their first Ergo tokens? Is there some exchanges or wallets that they can utilize to start actually having a little bit of stake in what you guys are building?
Well, maybe Nicholas and Alex, I should take that question. But before I do, I'd like to add some points just briefly to what Alex he was very comprehensively and well covered everything. But I just a few things from a third perspective, right? So Alex emphasized the commitment to decentralization. One thing to keep in mind is that Ergo it was developed with this commitment to decentralization. So everything is built around that. And so the technical solutions that were designed to ensure had to be workable and in a decentralized way. And that's a big challenge. So they didn't sacrifice decentralization to achieve some very ambitious objectives. They achieved very ambitious objectives through thousands of hours of work, research, collaboration, and by maintaining decentralization. Alex briefly mentioned the sound money point. Well, I think that's a very key point. I mean, contractual money is key, but also the sound money point I think is important because Ergo is a strictly limited supply token, approximately 97 million to be issued over 8 years. That will never increase, and so there is a limited supply out there. In terms of the storage rent fee and the new economic model, this is something that's never before been seen. So every 4 years, there's a fee charged to an unused, like UTXO and Bitcoin, an unused coin. If it's not been moved in 4 years, then there'll be a little fee. It'll be transparent. The users will know how much it's going to be, and they always have the option to simply make a transaction to avoid the fee, or just let the fee happen. It might not be that much. But this supplies an ongoing, sustainable supply of tokens to the miners, even after emission is done, which helps them ensure the security of the network. So not just relying on transaction fees like many other blockchain, proof of work blockchains out there, or possibly all of them. And then lastly, just on, you asked about applications that can build on Ergo. There's 25 examples already on GitHub. that the Ergo dev team has made, and anyone can get on and develop their own using the code and the stuff that's available already and the tools. But they've already got 25. Alex just covered a few of them. There are things, localized exchange trading systems. There's 2 blog posts on those already. There's also privacy enhancement applications. So I wanted to expand on those things first, but yeah, in terms of getting a community, so basically the Ergo team philosophy has always been just the core team, the community can organically grow around them in this building phase that's lasted more than 2 years. And so they've maintained full transparency with the whole crypto community. I mean, there's been constant updates on Bitcoin Talk. There's been ongoing Telegram. There's ongoing Q&As that are all available in the history. There's been a Telegram since at least I don't know, since mid to second, third quarter of 2017, right. And I was one of the first 10 people on there. So, but they did not. What they did not do was, like many other projects, is go out, look for VC funding, spend a lot of time raising $20 million, and then doing massive marketing campaigns and going on conference tours, because that's not they don't think that's the efficient way to get things done. They think that they need to keep their heads down, and there's a lot of hard problems to solve, and they want to do it in a rigorous scientific way. So all that's the history. That's why maybe the community, if people go and look at it, they may say, oh, the community is kind of small. Well, we hope the community is not going to stay small for very long, because like Alex mentioned in the social contract, well, it's for we don't have time to go over all the details of the social contract, but your viewers can read page 3 of the white paper. It's all there in one page. But this is an open permissionless protocol for common regular people to use, for anyone to use. So basically all 7 billion people on the planet can use this. So we want the community to grow and grow very fast. And this is the time for that to happen, because this is the time when his launch is not far off, tentatively planned for June 20th. So just in 2 weeks time. Now you asked a good question. So what's the relevance to your users and to your audience, and how can they participate? Well, obviously, I think Alex, coming from a technical perspective, he would love to see more developers building on Ergo. He would love to see more people just researching it. And I think those things are great. But from my side, what also excites me is people that are mining Ergo, people that are speculating on Ergo's future prospects, and people that are investing in Ergo as investors that think that that the community is going to build applications, are going to build on top of it, and it's going to become more popular.
Awesome. Well, Justin, I think that's a good area of coverage as well. We'll put any relevant links down below in the description for those who want to engage in maybe a community Discord or follow them on their major social media channels. But guys, I appreciate y'all taking the time. I love what y'all are doing in the sense of contractual money. It obviously seems, seeing as you guys have avoided the ICO route, you've been around for 2 years through the bull and the bear market, and you've got this very fascinating idea of saying, look, let's cut out all the BS. There might be some other kind of applications for enterprise on blockchain. There might be a room for dApps, but let's focus in on the thing that was very clear from the start of Bitcoin, and that was that finance was built for the blockchain. So I appreciate you guys coming on. It was great to talk to you all, and we'll leave all the relevant links down below. But thank you guys for taking the time to do an interview here on the channel. Really appreciate it.
Thank you very much. And yeah, please follow the Twitter and Telegram if you have interest. Yeah, thanks.
Yeah, thank you. Bye. So we have website, Telegram groups in both English and Chinese, and the website is also translated into Chinese. We also have Bitcoin Talk threads in English and Russian. We have Twitter, so please follow us. And soon we will announce wallet and some information on exchanges. So please join another financial revolution.
Awesome. Sounds great, guys.